Hey guys, welcome back to another video. We have a lot to unpack today, and I'm going to try to make it as short as possible and as simple as possible as well. That way this doesn't get overwhelming. But before we hop in, I want to say a big thank you to everyone who joined us for the Trading Unmasked workshop last week. It was a blast. I know we say this every time, but it does keep getting better and better. But this was the best group that we've had at a workshop. You guys made it fun. You asked very intelligent questions, and it reminded us why we love doing these workshops despite the lack of sleep, right? So today, we're going to follow up on last week's video on the euro dollar, and I think maybe if we have time, some of the other videos we did as well, talking about the euro yen. But I want to talk about euro dollar here on the weekly, because last week we spoke about being at a very important decision point where, well, the market looked to violate this level. Might have been 2 weeks ago, actually, but if we broke and closed this level, then I would expect a continuation to the downside as we broke out of this channel. You could see that we did. And then this past week, we started to retest a little bit. We're going to talk about what type of opportunities this provides. But first, a little bit of a fundamental background. And again, I'll try to keep this as simple as possible. Essentially, what we've been seeing as of late, and it is the end of the month, so wacky stuff happens, but we've seen a little bit of a rebalancing where a lot of investors are starting to fade the dollar, right? It's been a very, very strong dollar ever since the Trump election, and now some investors are starting to fade the US dollar in exchange for more of like a balanced portfolio, and there's a few reasons for this. One of the biggest reasons is that we are in monetary policy season. December is going to be a very busy month as 9 out of the 10 G10 currencies will be meeting, or G10 central banks, I should say, will be meeting. And I think like 5 of them are expected to make interest rate adjustments. I hope I have the dates right on this. I'll put a graph up so you guys can see it. But I believe we start off with Bank of Canada on December 11th, the ECB, so European Central Bank, on December 12th, the Swiss National Bank on the 12th as well. The US Fed, I believe, is on the 18th or 19th. I may have that wrong. I don't remember which date. And Bank of Japan is certainly on the 19th. And what we're expecting here is this, right? Specifically with the US dollar, there was this expectation of this continued rate cutting cycle. And this is something that we talked about a very, very long time ago, and it's been going on for a very long time. However, with last week's surprising, maybe not unsurprising news about the Trump tariffs, right? Have you seen that? If you guys haven't seen it already, I did a podcast about this. It's called, I think, episode 1057, Prepare for Volatility, where we spoke a little bit about it. But if you didn't see it on the chart, you see this big candle here? Yeah, that's when Trump said something about tariffs, specifically about Canada, and the market reacted in an extremely massive way. And with the threat of that potentially happening when Trump takes office, he did say that, hey, I'm going to sign it first day, January 20th. That would really interrupt the rate cutting cycle that we've been seeing in the dollar and may cause for a bit of a pause. So there's this short-term fading of the dollar where all these other central banks are doing stuff and the dollar may take a hit because of that. But then there's also this expectation of, hey, when 2025 happens, I can't believe it's 2025 already, but when 2025 happens, we may see kind of an opposite or at least a pause in monetary policy, and the opposite effect, a much stronger dollar. And that kind of sets up for what we're looking at here on the euro dollar. Again, we had the lower low, lower close on the weekly, right? You guys know the rules of structure. Break below, close below. If I identify that, it allows me to predict that we're likely to continue lower. My personal style of trading is a pullback trader. So I look for a little bit of relief, the market to pull back to a cheaper price. I like to hop on that pullback and look for the extension downward. And that's kind of what we're seeing right here. If we go down to a daily chart, we have another thing as well. We have put in, or putting in, it's not official yet, but we are putting in a classic reversal pattern called a head and shoulders. And I'll explain briefly how a head and shoulders works. Right? We have the market making extensions on the way down. Keep in mind, this is all within that bigger channel, right? Long extensions, short pullbacks, all the signs of a strong bearish trend. However, on this final move down, the one that breaks and closes below our channel, we have a few things that happen here, right? One, we have a shorter extension, right? Shorter extension, weaker trend. You can see long extension here, shorter extension, but still a good size one. And then another shorter extension, clues that this trend is getting weaker. We also see the rejection at the bottom here, right? In this past week's workshop, we spoke about, or we taught about different candlestick types, right? Strong, neutral, and weak. Although this, again, did technically break and close and break out of our channel, by no means is this a strong bearish candle. It is a neutral bearish candle because it closes in the middle third. And then we start to see a deep retracement on the way back, right? Remember, shallow retracements are signs of strong trends. So if you take a look at this first one right here, we only retrace to the 382. You take a look at this second one right here. We don't even make it to the 382. You take a look at this third one right here. Whoa, right? We're already up to the 886. So this is a sign of a weakening trend and a potential reversal. Now, it's not a reversal yet. Don't go ahead and buy it or anything like that. But we may see a failed extension down. Boom. And then if we can take out these highs right here, that would give us what's called a head and shoulders pattern, which is a classic reversal pattern. Now, there's two levels if we get this head and shoulders that I expect this head and shoulders to come to, right? One would be right in this zone right here, right? You can see this structure swap zone where previous structure support finds support again, and we had resistance up here as we tried to pull back and came back down, right? So a nice little kind of ice zone right there. Or of course the very highs of this pullback, which would be highest close, of this pullback, which would be right here. So kind of area 1, think 108s, area 2, think 109s. And I say this because if we are indeed going to see this kind of trend of a weakening dollar, which gives us a little bit of a pullback, and then a strengthening dollar as we start off the new calendar year, this could be the chance where that weakening dollar gives you a chance to get involved at a cheaper price, whether it's here or up here, and then take advantage of that newfound dollar strength on the way down for that bigger continuation that we're looking for on the weekly chart. So I hope that came out of my mind a lot clearer than it maybe sounded, because I don't want to make it over complicated, but we are, again, waiting for the market to do one thing in order for us to take advantage of it so that we can do the other thing. It's the same concept of, we spoke about supply and demand, but think about when stock markets crash, where I told you that in 2020 was one of the best investment years of my life, mainly because stock markets were crashing and everything was cheap, right? That crash, that correction gave me a chance to buy at a very cheap price for something that I knew would eventually resume in its normal direction. This is kind of the same concept here on the euro dollar. So just to recap, another thing we looked at euro yen. I can't remember if this was last week or the week before. Everything kind of runs the same, but we spoke about this cipher pattern and the potential 2618. We are getting close to that entry, X to A to B, B to C, C to D. Right there, again, we're looking for the zone between the 786 and the X leg to be our buying zone, which can actually double as a 2618 that you can look to trade up. Again, Bank of Japan's expected to hike rates in December, so that may throw in a little bit of a monkey wrench, but we spoke about that last week. Just a recap on this. And then it's big brother pound yen is doing the same thing, right? So again, just to keep it short and simple, X to A to B, B to C, C to D down here on pound yen. Again, if you want more information on these trades, go back to the last Trading Edge video I did, which I think was, it's called 2 Overlapping Trades, Analysis from a Fundamental and Technical Perspective. But of course, hopefully you guys are watching every video that comes out on this channel. So hope you guys have a great weekend. Thank you again for you guys that joined the workshop. Been releasing a lot of cool Trading Coach podcast episodes, and I got a lot more coming your way, so make sure you're listening to that on your favorite podcasting app. Enjoy the rest of your weekend. Until then, plan your trade your plan, and I will see you next week.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.